Hello everyone, and welcome to this latest video discussion as part of the RICS Tech Partner Program. My name is Andrew Knight. I've been with RICS for over 11 years now, and I work within the overall regulation, standards and thought leadership part of the organization. And my role is to look at the overall effect of data and technology right across the built and natural environment. With over 130,000 members working worldwide, right across the property cycle, on residential, commercial, land, rural infrastructure, it's obviously a hugely broad canvas upon which data and technology is having an incredibly positive and innovative effect. And today I'm really glad to have Michael and Graeme join me from Property Risk Inspection. So please do come on camera. Hello, both of you, and great to have you on the call today. Michael, perhaps if I could start with you first. It's always great to get a bit of a kind of backstory, both in terms of the organisation that you've built and your own personal story. So it'd be great to hear a bit about your backstory and the evolution of property risk inspection and its commercial journeys. So, Michael.
Sure. Well, I suppose I hate to go back to the late 1980s, but if we just, and I'll make it quicker than that, Andrew. Back in the late 80s, I was really fortunate as a kind of young botanist to get the chance to go to the USA to work in the northeast of the USA with, at the time, some of the really leading thinkers as change started to come into the environmental and biological environment. And I spent time in the United States working with academics, but also with professionals. And the takeaway, that the technical matters of what I was trying to learn about that whole idea of biology and urban society in flow and in flux, and the idea that sustainability was a thing. I was very fortunate on the technical aspects, but I was really fortunate to meet some thinkers around service. And what I brought back from America were many technical points, but I brought back this real desire to bring that American service culture back to the UK. And I was fascinated by the fact that the professionals surrounded themselves with service teams first, not second, first. And the service teams absolutely wanted to give people a nice day, and they wanted to walk in their client's shoes. And so when I came back to the UK, it felt very different. And I knew I wouldn't go into academia. I knew I didn't want to go into local government. And I absolutely had a calling to create a service-based practice around environmental science. And the secret of that success when I returned was we answered the phone. We built a team of people who answered the phone on 3 calls, and we went out and met customers to learn what they wanted. And so we began to answer the phone to developers and to airports and to stadiums and sporting centres, local authorities, and to insurers and lenders. And we would answer the phone, ask them what their problem was, go and see them, talk to them, and find out about things like substance of low-rise buildings and flooding and balanced runways, things I didn't even know existed. And we really did that. We walked in customers' shoes of solving problems around how do you manage to put 2,000 new homes in the Greenbelt and keep the badgers and the newts and the snakes and the birds and the people and the developer and the contractors happy. And frankly, it's an impossible, thankless task, for which I should have had an OBE a long time ago. So we've worked, we literally came back, Andrew, and we wanted to serve, we wanted to answer the phone for people to have a nice day, to bring our technical skill to bear for professional clients, always B2B. B2B, that was another thing I was convinced of. I wanted to work business to business because we felt we could make a difference. And we did that, and we built up a client base with many large blue chip companies in the UK because we would answer the phone and listen.
Fascinating. So moving to you, Graeme, now I know you've had, and you've been very honest in saying how many years it is, I think 30 odd years experience in the lending sector across most of those various operating models. What's once again, in a few words, that sort of backstory for you, and what are your key takeaways from this, and how, once again, that's informed what you're doing now?
I mean, yes, 30 years sounds like a long time. I have to say, it doesn't feel like it in that way. I mean, on the one hand, everything's changed, and in all honesty, very little has. I think that, you know, that the drivers for our markets and the way we do things have not really changed very much. There's a few natural contenders in there. There's the risk cycle, you know, and in a lender environment, there's a skirmish that goes on day in, day out, year in, year out, but ultimately is a cyclical one that says, is sales in the ascendancy or is risk in the ascendancy? And understanding how where you are in that cycle is very important, you know, and that, if you like, was something which we used to measure by number of repossessions or number of jobs coming in. And today, you know, we have more data and we understand the nuances of where we might be in a cycle. But that risk versus service, risk versus sales exists today in exactly the same way in a lender environment than it did 30 years ago. I think the other ones for me are is we have just, Michael's talked about service, and I think that when we get into the world of surveying and valuation and services, that there's a view really that service is built around time. You know, that if you deliver something back quickly, then you've done a good job. And that, I think, has been a problem for us for a long time in the lending supply chain, is that it's all built around how quickly can a lender, a broker, an estate agent, or what I would call the stakeholders in the mortgage proposition, kind of bank their commission. So we are driven by speed. And the other thing I'd say that is changed little in the period is fear. Instead of being driven by service, chartered surveyors, risk managers, they're driven by the fear of getting it wrong. So liability and fear becomes the overriding way that drives your behaviours, and that tends to conflict with service, to be honest. Because if you take a surveyor in his natural environment, he's somebody that is very attracted to a property in the same way that Michael is attracted to a newt or a lizard. So he wants to talk about it and he wants to get passionate, but then there's a conditions of engagement and a PI policy that means that he clams up and wraps everything up in a horrid sort of brown paper bag of nothingness and caveats. So I think that those are the things really, and so I think, you know, you've then got to throw in that issue of, I don't want to use the term vested interests, but there's a lot of big organizations working and have been working, and powerful relationships often mean that there is not a great deal of benefit to a lot of parties for changing very much. You know, so legacy is probably the other thing that has hung on in its various formats over 30 years or so.
I suppose it's interesting when you describe that. I think they call it in the capital markets that kind of risk on, risk off cycle, and then also those kind of fundamental dynamics of, you know, the illusion of speed being a quality rather than actually good due diligence, and the fact that actually although data and technology is presenting lots of opportunities in terms of that ability to present and gather data and act quickly, you've still got those fundamental drivers of risk and liability and assurance, which, you know, surveyors have to produce work output which has to be assured. So it's remarkable that actually, as you say, the more things change, the more they stay the same in certain respects, isn't it? I mean, in terms of your collaboration, when did you first, you know, as a team, is it come together, and what drove that collaboration?
I mean, the collaboration is probably too complex a word for it, Andrew.
It wasn't my fault.
It was, yeah. To go back again, move forward and back, 2005-06. I was trying to think how I could say it without offending anyone, but there was an initiative around 2006, a bit like the play that you're not allowed to say its name.
Oh yes, the play.
I know now that when you say HIPS, that various members of the establishment look as if you've just said a swear word. Back then, the interesting thing, Andrew, was that my clients in insurance and risk and premium and policy were very concerned that a very large workforce with a revolution in data capture and risk assessment were going to touch, at the time, around 2 million properties a year, not so much now, but around 2 million. And the questions gave us real cause for concern as triggers for a claim, first notification of loss. And they were suspect subsidence, suspect flood. So insurers asked me if I would put on my Batman outfit and go and investigate. And I ended up in a meeting room. It was at Brands Hatch. And Graeme arrived on a motorbike in full leathers. And he worked for Home Track, and he was very interested at the time in the whole idea of what insurers might know about risk. And I was very interested in what he knew about lending. And so we began to have conversations, and he convinced me I knew nothing about lending, and I convinced him he knew nothing about insurance. And from that, we really began to collaborate. Graeme then, when the government, the various governments decided to reorganise the universe, that was the moment where Graeme went and spent 3 or 4 years down in Oz on risk. And he said, if you just keep the chair warm and look after the UK for me, I will be back.
Now, on that note, Graeme, I understand that you did eventually clearly return from Australia, and I think you joined Nationwide at that time.
Yeah.
So what did you come back to change, and why, and what did you affect in terms of change, given what you'd begun to sort of think about in that space?
Yeah. It's funny because one of the reasons I was asked, initially, my first foray into Australia was to set up the Home Track business down there, which required the discovery of data, which was not in an organised format. So we in the UK were used to Quest, and we had electronic records, if not much else. But at least we could find where jobs we'd done were. Now, you go down into Australia, and it was a set of less organised data, and in an environment in which, of course, every state has its own land registry.
Yeah.
So trying to find data that would fire an automated valuation model was quite hard. So I had to go and find and talk to a lot of people to collate that. And one of those was a big firm of surveyors who could see beyond the threat of AVMs gobbling their lunch, and I got to know them quite well. Long story short, I went back to join that firm, Optian, in a couple of years later, once the Home Track thing had been done. And what I found was, again, that much was the same, but the nature of the Australian market and the nature of people's attitudes meant they were more nimble, and people in relatively powerful positions could make quite fast decisions about things. And they started innovating in the sense, for example, Westpac, one of the big four lenders, created a valuation tender for typically four big corporates down there, in the same way that there are big corporates and many independent valuers here. And they said, if you were to be able to demonstrate that you were doing our jobs consistently well, with data supporting your outputs, we would not hang the sword of Damocles of PI over you. We would remove the issue of liability if you could prove you would do the job properly. Now, this might not surprise you, but the big valuation firms at that point found that it would be too difficult and too expensive to change everything to get it right. So they actually opted for option 2, which was the status quo with a thumping great PI liability. Now, so that's just one example of the sorts of behaviour I saw. The other one was that although most things are the same in Australia, distance isn't. So you know, if you're going to fly into Broken Hill every 2 weeks to go and do evaluation, there's cost matters associated with that. And so, not surprisingly, organised, curated data supporting a man at a desktop became quite an important feature. So what I think we learned was that the lenders were more nimble. You had to do things in a different way because otherwise the money and the time just didn't stack up. And the only answer to that was tech and data. So when I came back from Australia, I happened to run into Ian Lang, who at the time was the Chief Risk Officer at Nationwide. He'd recently moved from Santander, and he'd been in Santander through the period of sort of the grisly reality of some of the property risk failures, blocks of flats, fraud, etc. And we started chatting and found that we had a shared vision and a passion to change things. And it was that once in a kind of lifetime opportunity where somebody in the right position with a thumping great big budget has an opportunity to do something. And we came together, and I immediately thought that, well, Michael's still sitting with a warm chair. This is the opportunity now to actually get to move. So we developed the idea of the Property Risk Hub. We took panel management of valuations back in-house. So you re-skilled the lender. You saved that money on the distribution, the post box, and put it into your own skills. And if you like, that was really the birth of property risk in the UK in that sense. And Michael and I are now together on the back of broadening that passion to do it more widely in the marketplace, and hence why we're talking to you, Andrew.
Indeed. Now, Michael, you alluded to the almost a virtual collision between the kind of view from the insurance perspective and then from the lending perspective. Given that kind of change management you did in the insurance side, was it reasonably straightforward to kind of move that across and fit that into that kind of lending environment, or was there still that virtual or real collision at Brands Hatch you talked about?
It was absolutely fascinating, really, Andrew. I first of all, as I said, I love a new industry. There's nothing better than sitting down. I spent 10 years in the technology court as a expert witness, and often a single joint expert. When you see professions faced with Queen's Counsel and you watch them wilt and fade away under detailed questioning, you learn to listen, properly listen to what's being said to you. And so the idea, Graeme, of bringing me in and the opportunity to sit down, and what struck me, and let's be clear, this is no criticism of any panel company or of any lender. What this is a cultural issue. And what was in front of me was that there were very large consumer-driven organisations facing outwards whose attention was on outwards, and they better have their attention outwards because all their competitors do. So there were these large clients who had to cede territory to panels to do the back end grunt. And people can say eye off the ball, it's wrong. In insurance, we had big insurers focused on customers, and they're very good at it. And loss adjusters who were big panels tendering 3 or 4 at the time, the same faces every time, who each time, Andrew, had to find some way to make the tender for procurement a bit interesting. So the idea of, let's face it, many of our largest lenders are large insurers. So the tension is already there within it. It was very easy to say, big client-facing customers and credit risk, and large panel providers who do your back end. And one of the things that I think the big thing for me about what made that easy was, of course, Graeme's skill meant that I didn't have to learn a load of things again. I could simply say, would it be fair to say it looks a bit like that? And he either folded his arms or encouraged me. So we slowly but surely worked through, and that idea of saying, if the back end of insurers, they used to be driven, they were utterly driven by time, but we changed that to service. One thing that perhaps your members and people within RICS wouldn't realise, there is only one moment in which you can differentiate an insurance product, and that is a claim. I had this drilled into me that the only time you get to show you're better than anyone else is to fulfill claims. And when people say insurers hate claims, that makes me smile, because there's a naivety there. Insurers have to have claims, and it is the only product differentiation. And so the only real thing for me, Andrew, was, Graeme, do you want your supply chain products and delivery to reflect time or service? And when he said service to the consumer, I went, it sounds the same as what I've done before. So very straightforward in that regard, Andrew.
Thanks. Now, one thing I wanted to kind of probe around is, you know, we all use terms like property risk, and I know the medical phrase triage has been kind of repurposed for this kind of flow of decision making. What do you think that actually means in this context? If we can unpack those, I wouldn't say lazy phrases, but they're very well used. But what does it actually mean from your perspective when we talk about property risk and that kind of triage approach to looking at it and managing it?
If I'll take triage and Graeme can take property risk. Andrew, you said medicine, you're absolutely right. But remember, if there is a major incident, or if you're at war, then you have to very quickly determine into which box, into which channel you're going to put victims who have been injured, because some of them will die in front of you. And some of them can happily sit on a chair for weeks. So you've got to make those decisions. And the idea of triage is simply that, is to say, make the right decision for the audience in front of you. Make the right decision. And if you think, Andrew, in insurance, it's absolutely clear. Why would insurers be very good at triage? If you have 30,000 properties flooding at the same time, it is absolutely critical to know the people who are at risk of drowning, rather than the electrical devices that might be ruined. So the idea in insurance is taken from medicine, but absolutely applies, because insurers are there on the front line and loss adjusters are there wading through water, working with the emergency services and helping get people, first of all, safe. So you can see that beyond safe is then all your electrical devices are ruined, your house needs to be dried out, your car is written off. But the reality is that we start with, is this safe? And triage is the idea of professionals making good decisions through information, through a proper assessment at the front end, and then you push people through your hospital. It's why A&E, Andrew, is at the front of hospital, because that's the best way to get everyone to the right ward. Great.
Yeah, so I suppose in that same way, Andrew, there has been credit scoring and behavioural testing of individuals forever. You know, so if we think of a normal mortgage application or a mortgage criteria as being, you know, credit and asset, a lot of time was spent by some very big organizations, typically in the US, to learn how to measure the behavior and therefore the likely ongoing behavior of an individual. But at the same time, if anything, lenders took more away from their valuation provider, because when I did start this job, when I was out in the field doing valuations and I filled in a mortgage form, it would ask me 2 questions at the end rather than 1. It would say, what's the value of this property worth, and what do you think I should lend on it? So in the old days, you know, you'd say this property is suitable for maximum advance, or this property is all right, but if I was you, I wouldn't lend more than 60% on it, which on the face of it, you know, asking a valuer to do that sounds like quite a nice idea. But of course, what it meant in the modern world of volume and certainty is that you couldn't trust Fred to have the same view as Frida. So that doesn't work anymore. So the concept of property risk is to say, well, what can we take from what we ought to be able to compile, this knowledge of the performance or likely performance of a single dwelling in a single place, and then let's apply over the top of that the circumstances of the person. So that means treating that property in a way that it deserves, and you know, and so a 5-year-old house in a nice place ought not to be subjected to, you know, the same as a not so nice place with a very high loan to value loan. So it is almost just a progression of triage.
Mm. Now, one thing that's always fascinating me is people sort of think about data and technology, but fail to think about almost the flow in terms of where data begins and the direction of time. I love Einstein's quote about time only exists to stop everything happening at once. So it's that sense of where do you start the process? Because if you think of kind of, you know, this world of conveyancing and buying and selling houses, the trouble is it's a bit like herding cats. You've got all these participants who've got bits of data floating around, but clearly from this kind of lender perspective, you want order here. You want things to happen in a certain order, and you want the process to kind of start somewhere. And from your perspective, what I'm hearing is almost you start with the kind of origination at the kind of the lender side and say, okay, let's get our ducks in a row. Let's send out an instruction. What does that really mean? And what do you think the reasons for having that kind of start of the arrow of time to be with the lender? Because you could otherwise get lots of inputs happening at the same time. It could be chaos.
We, again, let's think of the triage of this. And you're going to really like, Andrew, the idea that I can generate now the whole industry, the whole supply chain, down to the idea of a general practitioner and a hospital. And if you think of every day, a GP has dozens of people wander in, and they all want some cream for a boil on their bum, or some antibiotics, or a plaster. And we all know that it's straightforward and simple. And so if you think of things hitting a lender like Remo or automated valuation, then think of the GP where it's going to come in, it's going to look familiar. many years ago, I had to go and have a health scan for some insurance, Keyman Insurance, and I was sat with the GP, and I said, he did a lot of tests and blood pressure and tapped my knee and did this and put a light in my eye, and I said, how much do you get for this? And he said, about £130. And I said, so what's the basis? It's a gross risk assessment, isn't it? And he went, yeah. I said, how does it really work? He said, well, when you came in, you were able to walk unaided to the chair and you weren't sweating. Now, if you think of a lot of lending, Andrew, it should happen within the lender as very relatively straightforward. But now I'll define the whole current industry for us. It's a hospital with no A&E. And so all of the things that come in are randomly moved to the multiple wards. And so what we end up with is cases that are in physiotherapy where someone's lost an arm. But we've got this place where there's no triage. The very nature of the architecture is that all things land in a queue and you do them on a time basis. So how else would you expect if we got all the patients of Great Britain, had no A&E and simply filled our hospitals up, then I would guess you'd have lots of people with mumps in the maternity ward. So inevitably, the fact is, if we don't have the data at the front end, if we don't triage in lender at first notification, at origination, then what else would you expect than poor souls wandering round the corridors and then bringing files and notes back to reception to say which fool sent them here? So what do we see the conveyancers doing with their PVQs? Back with their paper, which fool sent them here? Yeah. This was never going to get away. This was never going to work, not in title, not in survey, not in risk. And which fool did this? So I'm passionate that until the industry says there is a property risk, what I think doesn't hurt a single client is open property. Open property with everything known to match open banking, and then we could quickly triage and organise, and it would benefit everyone in the chain.
So as you say, I mean, this is effectively a message for the whole supply chain and right through the conveyancing process, arguably, because you do need that linearity, don't you? And you need everybody to be working off, ideally, that open, trusted data set.
Yeah, and I think, Andrew, what we've got to remember is that we often see our market as being one of organised big players, but when it actually comes to selling homes, we are massively fragmented. You know, even the biggest estate agent chains do a tiny percentage of the market share. Conveyancing is still very much a cottage industry. So it's not surprising, if you like, that lots of different organizations all dabbling in bits and pieces, you know, that they're not well organized and they're not well structured to manage things in a single way. Now, the way that Michael and I see this is, if lenders who are not fragmented, because let's face it, 5 or 6 lenders do 75% of the lending in this country. If we get lenders organized, then supply chains have to have the software and the processes aligned with the lender. Otherwise, they can't receive an instruction. They can't undertake the work to the standards and the requirements and the specifications, and they can't send it back again. So if we can get the lenders working in an organized way, and that has to mean starting with the right data and the right rules to get the triage right, to match the appetite of each lender, then you'll get consistency downstream. And more than anything, you'll get everybody working off the same data. You know, even in credit, you will have a different score in 4 different places. And so what does the lender do? It builds its own credit risk scorecard in which it blends and models the scores from Experian or Equifax or whoever. Now, you can't have a lender trying to blend the potential answer from 4 conveyancers or 2 valuers. It doesn't work. So we start with the right data, we model it in the right way in a consistent way, the process is followed therefore in a consistent way, all the stakeholders have the same access to the same answer on the same property, and hey presto, those supply chains will become so hooked on that efficiency that they'll start using it for all the cash purchases too.
And I suppose perhaps it's an oversimplification, but if you think of the kind of summary of the stakeholders involved, the lenders, all those various participants in the supply chain around conveyancing, and we know we shouldn't forget the buyers, the sellers, the actual consumers, because ultimately, I mean, we're a public interest body. This should ultimately be about, and you started the whole conversation, Michael, with about service. I don't see any disadvantage to any of those groups in getting this right, unless I'm misreading something.
No, again, if you look at the impact on loss adjusting in the UK and insurance and service, there are new roles, there are new rates, there are new enhanced rates for more difficult things, there are new integrations between suppliers, there are lowered costs. It all starts from, we care about the consumer. Now, we know the lenders face their consumers with real intent and skill, and it really is a plea to say the industry can't lose, because I can tell you our chartered surveyors will have more varied, more interesting, more directed, more easily delivered work at a better price point. 15 years ago, a loss adjuster went to every single property. Everyone began with a loss adjuster who wheeled up and got out his pad and started making his notes. 15 years on, the idea that loss adjusters would visit at that price point every claim, and as an example of that, think of this: we have flooding at number 1 Acacia Avenue, a flooding event. Now, what's happened is the 14-year-old has run the bath and left the plug in. It is flooding, and there has been escape of water. Now, do you need to send a highly qualified, competent professional at that rate to see the results of a 14-year-old running a ceiling, because any reasonable contractor can figure that one out and can decide what to do? Did that mean less loss adjusters? Not one bit of it. More. Different jobs, desk-based jobs, triage jobs, audit jobs, product jobs. Their businesses are bigger today, and they manage more of the insurer's environment than ever before, and we do it in a world-beating way. So not one chance of a loser here if you just have the ambition to drive forward. And there's a point, Andrew, we cannot avoid this in front-loading data, because the consumers will insist, bit by bit, as more knowledge becomes available. It's becoming increasingly untenable, Andrew, to do it that way. The old way won't work, and each week that goes by, it gets harder to justify it.
I suppose on that point, I suppose I was about to ask the obvious question: why hasn't the sector done it before? But is it? I know you made that point, Graeme, about that firm being unwilling to almost, enact the changes that meant they could wave bye-bye to those expensive PII premiums. But do you think now, with this kind of consumer demand, that any kind of inertia that the sector's shown before will simply have to go, that the excuses, dare I say it, or the behavioural reasons why the sector's not embraced this will simply be blown away by consumer demand? Is that what you think is going to happen now to drive this change?
Well, it should, and it would, in almost any market but this one. And the reason I say that is that the nearest thing to buying a house is probably having a child, and that's one thing that the three of us won't ever have to do. But women go back and do it again, typically after a few years, and they've forgotten how painful it was. And actually, consumers don't buy houses very often. So, you know, it's difficult because the consumer, once they've got through the pain, tends not to have to experience it again for 7, 8, 10 years in this country. Overall, though, you've got to reckon that the technology, the cost base, the opportunities to run a better business where people enjoy themselves will see through. But I'm not yet convinced until we get some of the some better understanding amongst people. See, I think in Michael's world, there are not many people that still see themselves as an arboriculturalist. They probably see themselves as a risk manager. And that's what we've got to do. The components in this supply chain have got to see themselves as service industries, risk managers, technologists, data experts, not estate agents, conveyancers, and valuers.
Yeah. I was going to say, Andrew, apart from the fact I was worried where Graeme's labour and hard labour might take us in the discussion, and I understood the analogy just in time. But I think that's absolutely right. I think that there is one thing in insurance, insurers led. So one thing I would say right now is the client, the lender must lead, the lender must see it, because my feeling is that the supply chain, the big corporates, will absolutely embrace it with the greatest gusto when the client tells them they have to.
Yeah.
And so I would say, and the clients are being pressured by consumers. The other point I would make, Andrew, for us on this, and we all know it, the three of us know it so well, climate change. The requirements to bring an awful housing stock up to some minimum standards to hit a net zero target. If the fear and time and liability questions were taken out of the way, imagine the products that we could design to improve our property with a workforce in place with this skill set, Andrew. And I don't think our children will thank us. So I definitely say what happened in insurance was that the insurers said we're going to change, and adjusters saw the sense of it and went with it in the end. And they're now remarkable, world beating, best in class. And we can do that as well. And the risk is that while we hang on with our fingernails, meanwhile, the opportunity, Andrew, is slipping away in terms of climate change and being the profession we could be.
May I guess, you know, for me too, the other driver, RICS standards aligned to service and consumer and climate. Let's make sure RICS is progressing those standards and has the teeth to make sure that they're adhered to.
Yeah, I suppose as my final question, almost to you both, you kind of alluded to what you think the future of this space is with those drivers around the whole climate and ESG and sustainability, and ultimately what the clients want. And you've talked there about standards, but you know, in terms of data and technology and standards, what role do they play? Because we, you know, if we are, and I rather rudely use the phrase, it feels sometimes like herding cats, this sector, in terms of trying to get alignment, because there are lots of competing agendas and inertia that we've talked about, and behavioural barriers, because I don't necessarily see this as a technical issue. It's more kind of behaviour and agreement and convergence. Where do you see data and standards playing this key role in actually making this happen?
You got it right first, Andrew. Culture is a big thing for a profession, and I think that one lesson that we had in the insurance world was many of the technical statements and standards were brilliant, They just hadn't been kind of hooked together. I think one of the things here is that if we said to the industry, do you think you really understand lending? I mean, I'd be laughed off stage amongst a group of large panels and charts. Do you think you understand lending? How can that be a question? I think that's a question. I think it's a question of what the drivers are for lenders, how they behave. I went back to the walking in their shoes. And I wonder, Andrew, downstream of us, if everyone is, with the greatest of well-meaning intention, is walking in someone else's shoes. And I think that if we start and work upwards and say, many of the data standards, many of the common standards, many of the intellectual things are covered. We've brilliant your work, Andrew, in terms of data standards, the professional statement for survey. There is a mass of good work out there that just needs people with that insight to bolt together to be one chain. The wonderful work being done with people like OS and Land Registry, you know, brilliant, brilliant, brilliant. Why? Why? Why are we doing this? Now, if we work back to service, Andrew, and lenders and consumers, we'd find a purpose. And I'm not sure I see downstream of me a true consolidated purpose, a mission, a reason, but I see loads of good, well-meaning effort.
Your final thoughts, Graeme?
I think Michael's covered it. You know, in that sense, we know there's challenges here, but I always look at different industries and try and find out what it, you know, and you take a. I can flick anything from a frisbee to a can of baked beans across the checkout at Tesco, and it works because of a thing called a barcode. And that barcode is in essence an understanding of the price point, the content, the distribution pattern, the stock. It represents the organization of a way of developing, distributing, and selling things in a consistent, safe way. And we have got to get as close as we can to a barcode on property. And once we do that, we'll be able to transfer it, translate it efficiently and singularly. So, you know, I mean, far be it from Michael and I to put it back in your court, Andrew, but I see you as the man with the barcode.
Well, we can certainly start with the UPRN as the ID for it, and then everything needs to hang off that, doesn't it? At least we could make sure we identify the asset, we know which one it is, and then everything can hang off that, as you say. Well, it's been fascinating as ever to talk with both of you, Graeme and Michael, so thanks again for your time today, and I look forward to catching up with you again in the future. But thanks for today.
Pleasure. Thanks, Andrew.